let's break down fixed or variable. Guys, I'm gonna break it down. I'm gonna be unbiased. I'm gonna tell you the pros and cons. Let's start with fixed. Fixed means your rate will stay the same up to 5 years maximum. In other countries, you can fix your whole loan term of 30 years. Fixed, and it's a massive pro because see, your rate will not change. If you've heard the RBA catching up multiple times during the year and they go up and down, up and down, up and down, if you're fixed, your rate is protected for that fixed period. For example, if you fix at 5.99 for 5 years and next month the RBA go up, you're locked in. That is a massive pro. So let's draw it in red. A pro is security. A con though, if rates start going down, your rate stays the same. So that's also a con, true? And right now where we are in Australia, the rates are pretty high. So if you fix right now, more likely you might lose. Whereas only 3 years ago, the fixed rates were 1.99. They were the bottom of the market. Almost everyone was fixing. What has happened is the people that fixed, now rates have gone up, they are stuck here and still even now they're winning. But if you fix up here and the rates go lower, you can lose. So that is the problem with the fix. You got the pro, it's security, but the con is if rates go down, you're locked in. What the problem with being locked in is, let's say you want to refinance because rates are lower. You can't because there's break fees. So that is also another con. If rates go lower and you want to get out, there's going to be break fees. Another con is you got no offset. So no offset. Now what that means, guys, if you've got extra money and you want to try and pay off your loan faster, you can't because you can't get an offset on a fixed loan, okay? So that is a pro to fix, of course, is security. So you know that your payments will be the same. A con is, if the rates go lower, you can't break it, and if you want to pay it off faster, you are limited. That's where variable comes along, right? So a pro to variable is you can pay it off as fast as you want, and there's no exit fees. The government abolished exit fees more than a decade ago on variable loans. So you can go as fast as you want and pay it off in 10 years, not 30, and no one cares. That is a massive pro. So what we'll do is we'll do the same over here, pro, pay quicker, no problem. Again, another way to pay it off faster is with offsets and redraw. Now, if you don't know what they are, please follow the channel. We've broken down offset accounts and redraw in many, many videos. There's actually one really good one called offset versus redraw from Costa, one of the brokers in here, and that video explains it very well. So offset and redraw work with variable, not with fixed. A quick explanation is, if you pay it off 10 grand faster, you get charged interest on that 10 grand. If you need the money back out, you can redraw it back out of the loan. That's redraw, and offset has the same principles. Look, a big con is it's obviously risky because let's say 3 years ago, you were variable. Your rate was 1.99%. Now it's 6%, it's tripled. Whereas if you had fixed, your rate would stay at that low rate. It's hard to pick the market. People ask me all the time, Georgie, what's happening with interest rates? And we don't ever really know. So what you can do, and what a lot of our clients do, is to hemorrhage their bets. They actually do a split loan. So what a split loan is like this. Let's say your loan is $800,000. Now, rather than going all fixed, not having an offset, not having redraw, and rather than going all variable, having the risk of rates go even further, you're open to it, you can do what's called a split loan and split this into 2 loans. Now you might go, I want 600,000 fixed because I'm scared of rates going even further. So we'll put that in a triangle, fixed. And you might do 200 variable because I want the ability to pay it off faster. I want an offset account. So that is called a split loan. And then of course you can have your offset accounts here where you get paid into. And this is a pretty good structure that we do for a lot of our clients over here. Main account, savings, bills, and all those accounts are linked to my variable via offset. So that is what a lot of our clients do. If you're looking at doing fixed or variable and you have further questions, please comment, DM, or even just give us a call. We'd love to help. Thanks for watching.